In the last 100 years, the world has seen four major economic events: the Great Depression of 1929, the Black Monday crash of 1987, the dot-com crash of 2000, and the financial crisis of 2008. Four events that shook the global economy. Do you know what's common among them? Two things. They all started in America, and they all had serious global implications. Now, the year is 2023, and history may be repeating itself. Two American banks have collapsed. Global banking stocks have nosedived, and the crisis is spreading, and it's all linked to the United States of America. Yesterday, we told you about a third American bank on the brink. Today, it has been rescued. We're talking about the First Republic Bank. Credit ratings agencies had rated this bank as junk, but now it's got a lifeline. America's biggest bank swung into action. 11 banks injected $30 billion, $30 billion. So First Republic has got a cash booster of $30 billion. Why did 11 banks rush to save it? Essentially to save themselves. You see, this was done to contain the panic, to prevent another bank from collapsing. That would have really battered investment sentiment. So First Republic had to be rescued, and it has been. But this is not a sustainable strategy. And the crisis is far from over. Global markets are still in turmoil, and Europe is blaming America for all of this. Regulators in the European Union are calling American officials incompetent. That's the word they used, incompetent. Let me show you a report. It has quotes from senior Eurozone officials. This includes former regulators and policy experts. And they're all angry about one thing: the way the mess at the Silicon Valley Bank was handled. Remember, this crisis began at Silicon Valley. Now, European regulators say the US response was a disaster. I have more quotes. And these are the terms that they've used: total and utter incompetence, very questionable, a disaster. And the last quote is scathing. From a financial stability perspective, they really killed a fly with a sledgehammer. They killed a fly with a sledgehammer, say the Europeans. What are the Europeans so angry about? The Silicon Valley Bank and how the US decided to cover all deposits. EU regulators believe this decision undermines the global regime. As of now, this criticism has not been conveyed officially, but the indictment is strong. Europe says America flouted norms and that American authorities tore up the global rule book. But it shouldn't be surprising, because this is not a first. The US does it all the time. It likes to dictate and set the rules and break them when they do not suit its purpose. But that's a conversation for another time. Coming back to the issue at hand, investors are still afraid. They don't know when this crisis will bottom out. The situation is unpredictable, and some experts say the US government's response is not helping.
The only part here that really makes me worried is that we know that every time the federal government gets involved with the economy, we've seen it in the housing market, we've seen it in bank bailouts, it completely blows any possible perception or risk analysis of what is or is not risky behavior completely out of the water.
And that's a genuine question. How far is the US government willing to go? Will it save every failing bank? How many more banks are in trouble? We don't have the exact number, but multiple banks could be short on cash. Last week, they borrowed about $300 billion. The US Federal Reserve gave out this money. This is America's central bank, the US Federal Reserve. And who borrowed these $300 billion? Nearly half of the amount went to two banks, Silicon Valley Bank and the Signature Bank. These are the two banks that failed last week. Now they've got $143 billion from the Federal Reserve. The money has gone into the holding companies of these banks, $143 billion. What about the rest? Which other banks have borrowed from the US Fed? We don't know yet. The US Fed did not identify the banks. Neither did it share a number, perhaps because it did not want to feed into the panic. You know, once you declare that such and such bank is in trouble and has been given a cash infusion, it sets off a chain reaction. Meanwhile, the government is trying to manage the narrative. Team Biden is sticking to its message. It insists that American banks remain strong. Yesterday, the US Treasury Secretary said the same to the lawmakers.
I can reassure the members of the committee that our banking system is sound and that Americans can feel confident that their deposits will be there when they need them. This week's actions demonstrate our resolute commitment to ensure that our financial system remains strong and that depositors' savings remain safe.
But are these assurances good enough? Just today, another American bank was pulled from the brink. So Washington's problem is not the money, it is the crisis of confidence. And it is hurting businesses across the world. And when we are talking about a crisis of confidence, how can we not bring up China? Its debt piles are unsustainable. We're talking about trillions of dollars in debt, an economy under pressure, and erratic policies. Now, Beijing has shot itself in the foot again. It has disrupted a $21 trillion market, the Chinese bond market. There was panic among investors because China stopped sharing data on bonds. First of all, what is a bond? It is a way for companies and governments to raise money. Basically, bonds are loans. And China suddenly stopped sharing live data about the value of its bonds. This led to panic. Let me explain further. Imagine you're a trader. You buy and sell financial assets for a living, and for this, you rely on data. Now, you turn up for work one day. You switch on your computer and suddenly your screen goes blank. There is no data. You are unable to see the price of an asset. And if you cannot check the price, how will you buy or sell an asset? I'm not describing a hypothetical situation here. This is exactly what happened to Chinese traders this week. They were unable to check the prices of bonds. When they turned up for work, they were greeted with blank screens. In desperation, many of them came up with hacks. They turned to online chat rooms and to apps like WeChat to share prices and to do deals. But why did this happen? Was there an outage, or did someone order a suspension? Beijing has not offered an explanation yet, but reports say the orders came from Chinese regulators. You see, this data on bond prices is provided by pricing aggregators. Apparently, some of them were asked to stop offering data feeds. Now, we're not sure if it was a blanket ban, but going by one claim, 3 out of 6 aggregators were asked to stop providing data. After the chaos, the data feeds were back online, but the entire episode proved to be an act of self-sabotage. The market was disrupted. And why would China do something like this? After all, debt is their favorite tool. One explanation is this, that Beijing wants greater control over the market. It is making sweeping changes in its financial and tech space. It is replacing its banking regulator. China is creating a new agency to oversee the financial sector. It is also tightening regulation over all kinds of data. And what's driving these decisions? Here is how Beijing explains it. The new administration will strengthen institutional supervision, supervision of behaviors, and supervision of functions. They use the word supervision thrice in one sentence. And supervision in this case means control. These changes are being driven from the top. Xi Jinping has reshuffled his top team. It will give him more control over the state, and more control can also mean more cover-up. China is facing a serious debt crisis. Local governments have amassed a massive pile of debt. They owe more than $9 trillion. And thanks to the interest, this debt pile is growing. Local governments are not being able to pay these loans. So they're putting more pressure on banks. They want loan extensions. They want interest rates to be slashed. Loans of around $790 billion are due this year alone, $790 billion. No local government has defaulted yet. Some have had their loans extended. Others would want the same if they can't come up with the money. But how did they amass so much debt in the first place? This is linked to China's infrastructure push. When there was a boom, the local governments borrowed a lot of money. But right now, the Chinese economy is struggling, and these governments are under strain. China is trying to revive the economy, but even the new premier admits it won't be easy.
China's economic growth target is set at about 5%, which is established after taking into account all factors. Of course, now we have a large economic volume that has passed 120 trillion, and now there are many new challenges. In this high base, to reach the growth target of about 5% is not an easy task. We need to work harder.
Xi Jinping's new powers will come in handy now. But what about the investors? They want stability. They want less knee-jerk reactions from Beijing. For now, that's not happening. Now let's talk about TikTok. It's the world's fastest growing social media platform, also perhaps the most banned now. It has suffered two fresh blows. Within 24 hours, both the UK and New Zealand have banned TikTok. In the UK, it's banned from all government-owned devices effective immediately. Now, this is in line with other Western bans. The US, Canada, the European Union also banned the same platform. As for New Zealand, its ban will begin from the 31st of March. But it's only for about 500 people in New Zealand's parliamentary complex. The others can use the platform for now, the app. Reports say government agencies could later announce a full ban. And TikTok's problems are not just limited to government devices. The US has issued an ultimatum. Chinese companies need to sell their share in TikTok. If they don't, the platform faces a total ban in the US. So why has TikTok ruffled so many feathers? Let's start by looking at what the UK said to justify the ban.
We take the security of government devices very seriously, and we are constantly working to ensure that those devices remain as safe and secure as possible. And so, as part of that effort, I recently commissioned a review by our cybersecurity experts to assess the risks posed by certain third-party apps on government devices, and in particular, the installation and use of TikTok.
New Zealand's new Prime Minister, Chris Hipkins, explained his country's stance.
Departments, our system works slightly differently to other countries. Departments and agencies follow the advice take advice from the GCSB in terms of their IT and their cybersecurity policies. And we don't have a blanket across the public sector approach to this, which happens in other areas. And so I'd expect that departments and agencies, including the Parliament, would consider the advice of the GCSB in making those decisions.
This is what the White House said yesterday about a potential blanket ban on TikTok.
So, look, we've expressed concerns over China's potential use of software platforms that could endanger or threaten America's safety and their national security. So that is the president's concern. That is why we have called on Congress to take action. We see a bipartisan piece of legislation that that we are supporting. It's called the Restrict Act, as you all know and been covering. And so that's the president's main priority, to make sure when it comes to their safety, when it comes to their security, when it comes to our national security, that those things are protected. And so that has been the president's focus over the last couple of years.
So why are these countries citing national security concerns when banning it? You see, TikTok is owned by the Chinese company ByteDance. ByteDance is headquartered in Beijing, which means it has to follow Chinese law. And that means the Chinese government can access all the data TikTok collects. This is due to a law that was passed in China in 2017. It obligates Chinese firms to hand over personal data if Beijing demands it. Of course, TikTok says it hasn't happened yet. It also claims to be doing its best to protect user data. TikTok says it has spent over $1.5 billion on data security. It has also moved some user data out of China, but that's not helping. Now, Beijing has come to its defense. It is slamming the bans and is especially critical of the US.
数据安全问题不应成为个别国家泛化国家安全概念。
We have always maintained that the issue of data security should not become a tool for certain countries to generalize the concept of national security, abuse national power, and unreasonably suppress enterprises in other countries. The US side has so far failed to produce evidence that TikTok threatens US national security.
But many still aren't convinced. The UK and New Zealand joined the growing list of those banning TikTok. The first, of course, was India. New Delhi banned the platform after China tried to invade Indian territory in 2020. Then, as we mentioned, there are the government device bans imposed by the US, Canada, and EU bodies. Belgium also announced a government ban just last week. Taiwan, too, has banned TikTok. Taipei says China is using the app to wage disinformation campaigns in the island. And then there's a slightly unlikely nation to have banned this app. Taliban ruled Afghanistan, but their reason is quite different. They say the app is leading Afghan youths astray. So for one reason or another, TikTok is facing more scrutiny and more bans, and no amount of PR is helping.
So where are you investing?
Oh, China, just growing.
It's always been the manufacturing hub. Besides, India's struggling post-COVID.
Of course.
Sir, actually India's management of COVID has been much better. China's situation till date is unclear. After zero COVID lockdowns, China is gradually losing its supremacy as manufacturing leader. The country's share of global exports of footwear, furniture, or clothing accessories has fallen since 2016. Meanwhile, India has bounced back. So by the looks of it,
India could become the global manufacturing hub by 2030. Presenting Vantage with me, Palki Sharma, a first of its kind global show with an Indian perspective.